We're all familiar with the doomsday scroll of LinkedIn, which is literally saying the job market sucks. We have 30,000 layoffs, and every single day it's coming more. It's just depressing as ever. We have a community of over 1,200 students, and I'm going to show you how we all are getting out of this hole. And I'm going to offer you to show you how we did it. We actually have someone in our community who is a CFO of a major company, and even he is learning to trade and doing it while he is literally jet setting off the globe. This guy literally clocks in over 300 nights in a hotel, but still manages to trade. Now I'm going to show it how we do it. All we do here at Trader Foundation is risk management and pattern recognition. In contrast, if you actually go on my LinkedIn desktop, it looks like everything is fine. There was no layoff. What even happened? There's occasionally some little things about like we rejected your application, blah, 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 but no one cares because everything is rosy and sunflowers on LinkedIn right now on desktop. But mobile, completely different story. Comment below your most cringe moments you feel are in LinkedIn. So I'm going to take it to the charts. I'm going to showcase exactly what we traded and how anyone who's super busy, I mean, my guy, I don't want to name his name, but just call him Dale. He clocks in so many flights a year and is literally texting me when he's at the airport or in between meetings. If he can do it, you all can. So let's go over the first thing. I want to showcase the SPY right now. It is a short week because we have a Good Friday and the markets are closed. The market just closed and we're looking at the SPY off of the weekly and we closed at 655.89. We are officially in correction territory. If you are looking at this and be like, oh my gosh, I'm scared, stop that. I'm gonna smack that scaredness out of you. You need to look at this as this is a wonderful opportunity. I know the world of LinkedIn and corporate, it sucks. It's bleak. However, I'm going to show you another opportunity. This is an opportunity of investing. And in general, we have a dump, but this is opportunity that you can take advantage of. On top of that, like where do I forecast like how the markets are going? We are obviously down 10% and we've had 5 weeks of red. And this week we had as what we call a dead cat bounce. We are below the 20 MA off the weekly. On top of that, we have buyers, but it makes sense that we would have some form of bounce. Notice how we didn't even actually touch the 20 MA before we rejected. And how many times have we rejected before this? Because the last time we rejected, we aggressively pushed down. Since end of February, we have not been able to close above the 20 MA. So we know currently we are making new lows and we are not making higher highs. We are in a downtrending market. And notice I have all my alerts set. In my last video, I was mentioning to you that the pattern recognition was that, hey, this looked like a inverted rounded bottom and not in the positive peach gains at the gym. We are talking about this was showing signs of bearishness because of the pattern. And then within risk management, I wanted to choose a side and it finally did several weeks ago, especially when the call to put ratio changes. And a few days ago, on Tuesday the 31st, it finally showed signs of a potential bounce. So I'm going to now showcase, we're going to look at a trade that we did. And this is actually, shout out to you, Dale, because we literally called this out in our community and we were saying, oh, hey, this is going to be a prime opportunity. And I'm actually looking to buy a new car, so we're talking about some other things too. Shout out to him because we literally got out with 50%. Let's go over MU. Also, if you want to work with me and be like Dale, link is below. But let's get to MU because I'm going to isolate exactly what we were seeing. So MU had signs of obviously we had an aggressive downturn and it dropped from like 472 all the way down to 313. Of course, there are times that it can just go down completely. However, it showed signs of life because on the 31st, we have an aggressive hammer candle with tons of buyers after this massive dump, and we swept a little bit below because what happens is people will be like, oh, I'm going to short this, massive bearish engulfing candle. But then what retail is going to do? They'll be like, screw you and all your puts. I'm going to sweep all that liquidity and make this price move higher. Now, because we are swing traders, we look at the fact that we look at the daily and longer time frames. So after this day closed and we have a strong hammer candle, swept liquidity, and we have all buyers above average volume, I know like, hey, the SPY closed bullish. And how does a person, like for instance, Dale, manage a trade like this when he's jet setting off all over the place? You put auto close orders and alerts, and also make sure you have Wi-Fi on the plane. And also it's not sketchy. That's how you manage it because we have a system and it's trained. Now, I also closed this too as well, and I was targeting exactly around 375. But the thing is, this SPY, it closed a little bit higher. The volume is mediocre because of the holiday weekend. It's not that like, oh, I feel like, bulls are in control. We're still in a downtrend. And notoriously, the day after Easter, or the weekend after Easter, usually is like historically. That's also the reason why I didn't want to play prolonged, especially when I'm fighting against the trend. A lot of these stocks, even though the SPY is dumping, there's always rebalancing occurring. And the money flow of Wall Street is definitely circulating out of big tech stocks. But you gotta look at this as opportunity because from an investing perspective, the biggest gains particularly come from growth, which is stocks like Meta. Even though as a company, I disagree with all their values because they're laying off people left and right in middle management, which a lot of these people are my friends. As a company, they're a freaking cash making machine. So let's go over it. Off the weekly, we are down close to 35% from where we're at the lows of the previous week. I want to take it a step back even more because when you're, investing and looking at things, you want to look at longer time frames. So let's pull it up on the monthly. So I actually have a rule that whenever a stock, in particular Mag 7 stocks, have brushed below the 20 MA, which is what I have, because my charts are very clean. I keep it simple. I always say like, hey, that's an opportunity. I better dang well take this. I saw the close of the previous 2 months ago and I was like, oh, it's going lower. But I started my positions and started adding on because this is prime opportunity. And like, let's just look at this. It doesn't really, first of all, brush the lower Bollinger Band very rarely. The last time it did was 2022 when they went all into the metaverse, which I was like, Zuckerberg, like, WTF, what are you doing? Weird. He lost me as an investor too. I was like, I don't know what you're doing. And then once it started turning around, I was like, all right, I'm back. This one right here, it hardly brushes the 20. The 20 MA is very rare. It only happened 2025 in April Liberation Day. It happened again 2023, but we were in a bear market already. But it only offers this kind of opportunity every 1 to 2 years, and you gotta take it. And this is what we train our like 1,200 plus professionals. Look at these kind of things as opportunity. Why is Meta an opportunity? One, it has, AI monetization, $10 billion run rate, and there's over close to 3.6 billion users because they own also WhatsApp, IG, Threads, Facebook, right? 24% revenue growth. They have dividends. And the biggest thing I see is like one of the biggest things, especially being in finance, they have $62 billion in buybacks. And on top of that, they are spending money on their CapEx and it's giving them a competitive edge. Level right now, when you are investing, you are not shopping at like a discount drug mart, guys. You are shopping for quality companies that unless the narrative has changed completely, they're still the same companies. And Meta is still the same company. It still makes tons of money. This is a very fair average level to purchase. Now, another area that I'm looking to add is really, and I think I have set 480s. Why do I say that? Because that was when we hit Liberation Day. I do think this will go lower, but one of the things that I will teach you, I am not a soft person and I tell you like it is. The opportunities are in front of your face. If you wanted to own Meta, purchase them now and then start averaging in. That is the rule. The traditional corporate ladder is really no more. I've never seen a market and job market in particular like this, but there is other ways. While you're kind of, going through your hating life at your desk job, find another way. If you want to work with me, the link is below. I only take a few people just because I want to work with the best and I work with people like CFOs or VPs, which is why I encourage you to like and subscribe, and I'll see you guys in the next one.